The president of the World Bank Group, Mr. David Malpass, and the managing director of the International Monetary Fund, Ms. Kristalina Georgieva, have stressed the need for policymakers in Nigeria and other low-income countries in Africa, as well as emerging economies, to create targeted finance for small and medium-sized enterprises in their countries. The financial giants made this call at a joint seminar titled The Way Forward, Building Resilience, at the ongoing IMF World Bank Spring meetings in Washington, D.C., saying that such interventions would help enhance inclusive growth, tackle inflation and high interest rates. They noted that the global economy is expected to grow at 3% for 5 years, despite an increase in consumer spending in the United States, Europe, and China. The Global Bank also predicts a decline in global economic growth, which would impact negatively on low-income and emerging economies. The Washington-based bank added that for the first time, there was an assembly of all creditors and debtors to address debt crisis globally. The Federal Inland Revenue Service and the Nigerian Customs Service revenue collection increases by 46.8% to 12.7 trillion naira in 2022 from 8.7 trillion naira in 2021. Latest data from the National Bureau of Statistics shows that the agency, including Nigerian Upstream Petroleum Regulatory Commission, formerly the Department of Petroleum Resources, received 2.6% of the total revenue collected as the cost of collection during the period. This represents a 29.6% year-on-year increase compared to 329.34 billion naira withdrawn by agencies in 2021 as cost of collection. The breakdown shows that the FRS collected 10.1 trillion naira as revenue in 2022, representing 2% of total generation as the cost of collection. Nigerian Customs Service followed with 2.6 trillion naira revenue generation, withdrew 128.64 billion naira as cost of collection. Well, moving on now, the Bureau of Public Enterprises has signed a tripartite agreement to commission the reconcession of the Lagos International Trade Fair Complex. This is contained in a statement signed by BPE's Head of Public Communications, Mrs. Amina Tikur, in Abuja. Mrs. Tikur said the Bureau signed a tripartite agreement with Portman Freight Services Limited and LITFC to lease a portion of the complex to Freight Servicing Company. She says the Director General of BPE, Mr. Alex Oko, while signing the agreement, said that the event marked the commencement of work on the portion of Parcel A and B that was designated for concession. The DG also said the standardization of lease agreements would ultimately increase the earnings of the LITFC and the federal government in particular. Mr. Oko said the reconcessioning is in line with the Privatization and Commercialization Act of 1999. The National Council of Privatization had approved the concession of LITFC to Olic Nigeria Limited in 2007. As May 29 handover date draws near, the President-elect Asiwaju Bola Ahmed Tinubu has been urged to take economic policies and research as a priority to enable business in the country to compete with other businesses across the globe. This was a submission of Mrs. Morenike Babintin Ashayi, President at International Center for Tax Research and Development, on our Business Nigeria program. She stressed the need for the country to move from consuming nation to production and to create the enabling environment for businesses to thrive.
We have to take economic policies seriously. And there's no way we can develop economically if we are not ready to support and sustain research, innovations, and so on. We have to stop all this importation we are doing. I will want a situation that the government, the new government, actually have meetings with organized private sectors, with small business associations, and know how they can help us move forward. I would like a situation that our secondary school leavers, they have jobs to do when they do not have admission into the universities. So we have to prepare for them. All the goods that we are importing that can be made locally, let the new government ensure that it is done. It's important. We should stop all this kind of importation into the country. Let us use it to find jobs for our for our young ones. Economic activities cannot be improved upon, Tolu, because now we have three major issues. We have security issue in the country. We have constitutional issue in the country, and we have nationality issue in the country. So if I were the president to take on this next dispensation, I'm going to spend the next 3 months actually working on the national issues, the constitutional issues, and the security crisis. Because without all these three things, there is no economic planning that can be effective.
Mrs. Ashai there setting an agenda for the incoming administration. And out of the country now that's outside our shores, Cameroon is seeking to rejoin the U.S. Trade Initiative for Africa as the country battles to boost export revenues amid failed foreign exchange earnings, according to the economic minister, Mr. Alamine Ousmane Mey. Mr. Ousmane Mey said his country has begun talks with Washington for admission back into Africa Growth and Opportunities Act, which grants Africa countries tariff-free access to the U.S. market. The minister spoke at the Atlantic Council think tank on the sidelines of the IMF and World Bank spring meetings in Washington, D.C. The fallout from COVID-19 pandemic, global stocks triggered by the conflicts in Ukraine have hit Cameroon hard, denting economic growth and undermining its ability to repay debt. The International Monetary Fund forecasts that Cameroon, a central oil producer, will record 4.3% economic growth this year. The fund has classified Cameroon as being at high risk of debt distress, but the fund added that Yaoundé's debts could still be sustainable with sound fiscal reforms and management. Asian stock prices rose today, boosted by investors' optimism that the region's central banks will continue to pause or end interest rates increase cycles. Whatever action the U.S. Federal Reserve takes, MSCI's broadest index of Asian Pacific shares outside Japan rose 0.44% as trading resumed after a long weekend holiday in major Asian markets. Japan's Nikkei advanced 1.34% to further its gains as the market welcomed the new Bank of Japan's governor's first public remarks on maintaining the central bank's ultra-easy monetary policy. Australia's S&P/ASX 200 index gained 1.25%, with miners' Newcrest shares jumping as much as 7.1%, on an improved takeover offer from Newmont, making it the top gainer on the benchmark. Hong Kong stocks traded mixed as sentiment took a hit after data indicating China's demand weakened persist, but property developers rose. China's consumer inflation hit an 18-month low and the factory gate price declined in March as demand stayed persistently weak, shoring up the case for policymakers to take more steps to stop the uneven economic recovery. According to the National Bureau of Statistics, the consumer price index surges by 0.7% year-on-year, the slowest since September 2021, and weaker than 1% gain in February, while producers' price index fell 2.5% year-on-year, the fastest pace since June 2020. Compared with 1.4% drop in February, the PPI has fallen for 6 straight months. Economist at Gaotang Juna International, Mr. Zhu Hao, notes March inflation report suggests that the economy is running a disinflation process, which calls for monetary policy easing to boost demand. And finally, on business news, crude oil price rose today on expectations of potential economic stimulus by China's healthy demand in the rest of Asia and dropping U.S. crude stockpiles. U.S. West Texas intermediate crude is selling at $80.37 with an upward price review of 0.79%. Brent also experienced an upsurge of 0.67%, selling at $84.74. Bonny Light sells at $85.03 per barrel, with an uptick of 0.54%, and for the OPEC basket, crude oil dealers are offering $85.49 per barrel.